Welcome to the latest episode of our podcast series for financial advisors. Today's episode is Sanctuary 2.0. Adam Malamed is reframing growth with advisor autonomy. It's a conversation with the CEO of Sanctuary Wealth. I'm Louis Diamond, and this is the Diamond Podcast for financial advisors.
At Diamond Consultants, we help elite advisors identify the right environment for their businesses to thrive, whether that's at a wirehouse, boutique, or independent firm. With nearly 3 decades of experience, we've guided thousands of advisors and represented more than $250 billion in assets transitioned. And each year, 1 in 4 advisors managing $1 billion or more who change firms are our clients. Our process is education-driven and based on building relationships, starting as your strategic partner well before you're even thinking of a move. To schedule a confidential conversation, call us at 908-879-1002. Wondering why advisors change firms and where they're headed? Are transition deals going up or down? Those very questions and more inspired us to create our annual Advisor Transition Report. It's the award-winning, data-driven resource designed for advisors that connects the dots between the motivations around movement and the firm's appetite for top talent. Arm yourself with the knowledge you need to make smart decisions. Download your copy at diamond-consultants.com/transition report.
Supportive independence has emerged as one of the most dynamic corners of the wealth management ecosystem, bridging the gap between the turnkey structures of the wirehouses and the full autonomy of running your own RIA. Yet for advisors, the real question is often, do I want to go it alone or have the backing of a platform? Supportive independence was born to answer that dilemma, offering ownership and freedom while surrounding teams with the infrastructure, technology, and expertise needed to accelerate growth and provide scale, all with the added benefit of a community built on accessible leadership and advisor talent. It's in this space that Sanctuary Wealth has carved out its niche. Since its founding, Sanctuary has been positioned as a destination for top wirehouse teams seeking more autonomy without giving up the advantages of scale. And under CEO Adam Malamed, the firm has entered what he calls Sanctuary 2.0, a new era of growth, innovation, and partnership designed to help advisors not only transition successfully, but thrive long after the move. In just 2 years, Adam has helped Sanctuary almost double in size, expanded its reach through the acquisition of True Independence, and solidified its standing as one of the most compelling platforms for elite advisors. Building on his experience scaling Ladenburg Thalmann into a multi-billion-dollar enterprise, Adam is now leading Sanctuary into its next chapter with a sharp focus on growth, technology, and long-term sustainability. In this episode, Adam talks about how Sanctuary has doubled in size and why its growth strategy continues to resonate with elite advisors. We dig into what makes supportive independence work and how Sanctuary is structured to keep adding value long after an advisor's initial transition. He also shares how technology, data, and AI are reshaping the platform for the next generation and why succession planning, equity monetization, and access to capital remain at the center of the Sanctuary future. It's a candid look at where one of the fastest growing firms is headed and how it reflects Sanctuary's path for growth in the years to come. So let's get to it. Adam, thank you for joining us today.
Louis, thank you for having me. It's great to be here.
Very good. Well, let's start at the beginning. Tell us about yourself and how you found your way into the great world of wealth management to begin with.
Yeah. So I'm a born-hard Brooklyn boy. I'm originally from Brooklyn, New York. My dad was a New York City taxi driver. So we were real New Yorkers and spent most of my early years up until my 20s in Brooklyn, and then found my way after college to be a financial advisor. At the time, Louis, we called them stockbrokers, and just became infatuated with the industry itself. It was an industry that I quickly learned. I learned about management. I learned about the brokerage world, the RIA world, and it led me to a career that I would have never thought that's where it would have wound up. as it relates to being a financial advisor, that definitely was not my calling. And I think I was so great at that. But my calling my whole life was really on my entrepreneurial aspect of looking at companies and starting companies from early on in my life. And so that was really exciting to me about being in an industry that where if you had an entrepreneurial viewpoint about an industry, the maturation of the industry and evolution of the industry, I think could lead to success. And that's really where I chose to stake my flag. So after learning about the industry in 2002, I talk about a lot to a lot of folk about dare to be great moments in life. I think we all have them. I've been fortunate enough to have a couple of them, but in 2002, I started my own brokerage firm focused at that time on the institutional side of the market, the hedge fund world, and the sell side research world, of which from 2000, it was like 2000 to 2005, built up this company, which then led me to my big wealth management endeavor, which is where I spent the better part of my career prior to Sanctuary.
So you've had some lofty jobs. I know for a while you were the chief operating officer of investment bank and broker-dealer holding company Ladenburg Thalmann, which is a name that's like this point's a blast from the past because they owned for a period of time or for a while independent broker-dealers like Securities America and many others before they divested to Mosaic. So can you talk a little bit about your time at Ladenburg, just what you saw within Ladenburg that led up to the ultimate sale of the company?
It's so funny you mentioned it's a blast from the past because it has a storied history way before I got there. It was at Ladenburg at the time was one of the oldest members of the New York Stock Exchange, I think 1876. It's got a storied history there. But when I was brought in 2005-ish, I was brought in because there were people that were looking to put capital into the company itself. And at the time, it wasn't even an investment bank. It was an equity capital markets firm. And they had two significant deep pocket investors that wanted to put capital in the space that you could deploy responsibly. And that's where I came in, my partners came in, and looking back now, and this was 25 years ago, we had a vision and a thesis in the wealth management space. And then we went out there and we spent a lot of time and a lot of hard work going to execute on it. And the vision really was just the part of the space that we really liked was the independent space. And it was the independent space. If you go back to 2005, it wasn't cool to be independent in 2005. If anything, everyone was a naysayer about the space. But where we really saw opportunity is if you looked at the space back then, and I think it's actually very relevant to the space today, the industry back then was severely fragmented. Economies of scale were continuing to drive the margins of the business. And the fact that it was so fragmented, you would sit there and say, okay, this was an industry that you can grow in. It had long-term demographic trends that supported growth. So what I mean by that is, although the industry today has moved more towards a higher net worth, ultra high net worth space, back then in the early 2000s, it was more of a mass affluent space. And you could sit there and just look at the projections of the baby boomer doesn't retire until the last one until 2029. And this mass affluent marketplace was supportive of investing capital. There was also the emergence of technology. The wirehouse did a really good job of technology in the past. The independent space being born out of insurance companies. If you go back, you want to go really history on the independent space in the 70s, 80s, and 90s, they lacked technology infrastructure. But then you had the custodians. You had the Fidelities, the Schwabs, the Pershings, the TD Ameritrades at the time that saw this huge trend that was being projected to happen of independence versus the wirehouse over years. And they made a big investment of technology in the space, which really was the entire thesis of why we wanted to deploy capital in the space. And I was executive vice president, chief operating officer, and also sat on the board. Ladenburg was also a public company. So I sat on the public company board. And we built over the time frame from 2005 to 2020 one of the more successful independent wealth management platforms in the industry. We grew assets from it was like $500 million to close to $200 billion in 2020. So we had significant success in the space.
Yeah. And if you're able to, can you talk about the decision of Ladenburg and your partners to sell the wealth management business essentially to Advisor Group, which was called at the time, now called Mosaic?
Yeah, it was Advisor Group at the time. And Again, the shareholders of the company that had been invested in the company as a public company, were there for 20 years. And I guess they wanted liquidity. As we all know, many people within an industry want liquidity. And if I'm just being honest with myself, at the time I was being groomed, I believe, to step into the shoes of, I think, one of the best CEOs that ever served our industry, Dick Lampin. So selfishly, I don't know that I wanted for the company to go through a transition like that, but I didn't control the company. So yeah, the company went through a process, and Jose, I would say, one of the best acquisitions that they ever did in acquiring that platform.
No doubt about it. So then you probably took a much needed vacation or sabbatical. And in 2023, you were named to be CEO of Sanctuary. I know you're on the board of Sanctuary for a period of time, where you worked with one of their private equity sponsors. What did you see in Sanctuary that made you interested in the gig?
First, I did take off longer than I expected. I took a 3-year sabbatical. And remember, I think you know the story. We had closed the Ladenburg transaction 3 weeks before. It was February 14th, 2020, 3 weeks before the world shut down. Yeah, timing was, I would call it, interesting. So I took off probably longer than I had ever planned on taking off, which was a great reconnect for me and my family after 20 plus years of running really hard. With Sanctuary, the question about what was appealing to me, first of all, when you take the role as the CEO, it's a huge responsibility. And it's something that I don't take or would ever take lightly. The fact that you just mentioned that I was on the board for 7 months was very helpful. When most companies in the world bring on a new CEO, the CEO doesn't get to spend 7 months and really learn the platform, look underneath the hood. But the fact that I was on the board for 7 months, I learned about the entire platform. I got to meet the incredible people that were there. And there were a lot of factors that were supportive of my decision to move forward. Number one is, I just mentioned the people that were there. So I was exposed for 7 months to the executive leadership team and the senior leadership team. And when you get to spend time with who are my business partners today, and I think you know them very well, Vince Fertitta, Bob Walter, Michael Longley, Janae Hoosier, and I can name a host of people. They're some of the best in the industry, and I could sound biased saying that, but I think the track record speaks for themselves. It was also important that if you look at our senior leadership team, let's say the top 30, 35 people, 50% of them come from a wirehouse, 50% of them come from the independent space. And having that ingrained in the DNA of the company is just super critical if you're focused on the breakaway space, being able to say that you really understand. You have senior people like a Vince Fertitta that spent 26 years at Merrill Lynch. You really understand where the advisor was, but then also the fact that the executive leadership team had so much expertise in the independent space. You can equally say that and even more importantly, I would argue that you understand where they're going to spend the rest of their careers. That was a big factor for me. Another one was that the platform, Sanctuary platform, had been built, and it was already a really good platform. It had scale, but it wasn't so big that I felt like I could sink my teeth into it and make a difference. And we've done a lot of things over the past couple of years, which I think were very helpful to our growth and success. Another big aspect of agreeing to take on a role like that is access to capital. I always like to tell people that you can have the best strategy in the entire world, but if you don't have capital, then you don't really have a strategy. And you could have a really good strategy, but if you have capital, you can hire the best people in the industry to go out there and go execute a plan. And Sanctuary had just taken on a partnership with Kennedy Lewis, a very successful private credit fund. And hopefully we'll get into talking just about the space and the capital that's out there, but there was no shortage of capital to the space. So when I looked at all of those different factors that were out there, it was easy to make that decision. And finally, it was like my wife, I was sitting home with her for 3 years. She was like, Adam, it's probably time for you to get out of the house. So that was another internal factor at the Malamed household.
So number one was your wife was sick of you.
Yeah.
But everything else seems to make a lot of sense. It's a big decision to step into an established company, one that had a culture, et cetera. It's very different than founding your own company and building it exactly the way that you would have with your people, et cetera. You've done I think, pretty incredible job of ingraining yourself and keeping the core of what's made Sanctuary special over the years. How about any lessons from Ladenburg that you brought to Sanctuary? There are a lot of similarities between the businesses. Ladenburg and their broker dealers serviced independent advisors, provided technology and resources and compliance, et cetera. But the fundamentals of the target advisor, the types of clients those advisors served, the custodians, et cetera, are quite different. So how did you thread the needle between what you knew to be true from the Ladenburg years to now stepping into this more RIA type construct?
Yeah. So you get 3 years to reflect, Lewis, and you get 3 years to do a lot of thinking. And my previous experience at my previous firm before Sanctuary was an incredible experience. But as somebody that has really focused on building businesses and focused on strategy, I sit there and I think a lot around first time shame on you, second time shame on me. So my learnings, where I can learn from, I will hopefully not make those same mistakes again. And the Sanctuary team is just super supportive of that. I can give you a list, Lewis, of a lot of things. I would tell you probably the biggest one is because we grew my previous firm from something small to something large, and Sanctuary is on a very similar trajectory. One thing I believe we're doing at Sanctuary that I think is making the company a more successful company. It's something that we did in my previous life that we did probably at the latter part of running that company, is just being more rigorous around data, being more rigorous around how you use analytics to support decisions that you make. And I think it's critical that our industry, there's so much data that's out there. There's so much change that's going on out there. And we talk a lot about having a vision and seeing an opportunity in the marketplace. And because there is a lot of opportunity. And I can sit here and tell you that I've never thought that the industry has had more opportunity as it has today. But my biggest lesson is, are you utilizing data and analysis to support your go forward strategy? And I'd say that, Lewis, that's probably the biggest lesson that I'm carrying forward.
It's a good one. Yeah, you kind of had a blank canvas or a pseudo redo. That makes sense. For
Yeah.
anyone, I would say is probably living under a rock and hasn't heard of Sanctuary and or is new to our show. We've had the privilege of interviewing probably 10 partner firms or more over the years, whether it was the Chapel Brothers or Kelly Milligan or Rory O'Hara. And I'm missing a ton of very notable guests. Can you talk a little bit about where Sanctuary is today in terms of assets, number of partner firms, and any other stats or figures that can give us a better sense of Sanctuary in the year 2025?
Yeah, we've experienced significant growth. And I will say that the company experienced significant growth before I got here, and already carved out a niche before I got here as being the destination of choice for advisors that were looking to leave the wirehouse and go on their journey for independence. And there's a couple of firms in the industry, and I would argue that Sanctuary is at the top of that list. And it continues to do so. And we do so by, I believe so, institutionalizing the platform, which I think we've done a great job of over the past 3 years, continuing to round out our executive team and our leadership team with experts around the industry. But from a pure numbers perspective today, and I can give you the 3-year change just from when I stepped in 2023, there were I want to say 68 partner firms. We'll finish the year of 2025 with over 125 partner firms that we partner and service and support. In 2023, asset levels were about partner firm asset levels. The assets that the households and assets that they work with was about $22 billion. And we will finish this year, depending if the market keeps going up 3% every day, somewhere between, call it $55 to $58 billion of assets. So we've had significant growth on the platform, and we continue to focus and stay in our wheelhouse of working with advisors that are looking to make that shift from the wirehouse, but really staying at what I would argue is the top of the food chain, more sophisticated advisors that have pedigrees, that have designation status. We have minimums that the industry understands where our minimum has been historically. I would say that we're probably only onboarding firms that are probably 3 to 7 times what our minimums have been historically.
Amazing. So, and the minimum's typically around $1 million or so. So you're kind of moved more up market as the platform has taken hold, and you've gotten proof of concepts and now well beyond proof of concept.
Yeah, the minimums historically were $1 million in revenue or 150 million of assets. And it's not a perfect world to dive into. Every single team fall into that category. 98% of them do, but I would tell you that most teams are 4 or 5 times that. This year alone, we brought on a couple of multi-billion-dollar teams. And we internally, Lewis, we have conversations about should we be raising our minimums? And that was a conversation of last year. It's just happening organically. I think it's happening organically because of how our industry continues to evolve. The type of advisors or independent wealth management firms that are trying to make this shift to independence and really looking for a complex or a platform that can be complex enough to support their complex needs.
Yeah, well said. If you were sitting across the table, let's say from a wirehouse or whoever you would identify as your target advisor, what would the recruiting pitch sound like? Or not the pitch. We don't have time for that. Let's say the elevator pitch or the high points that you'd want to leave them with.
Actually, we don't give an elevator pitch because we spend so much time with a potential partner firm understanding, are we the right fit for each other? And that's a long process, how long these processes go. And so I don't know that I could ever sit here and say it's one sentence or it's a paragraph, only because we'll spend sometimes 4 months, sometimes 8 months, sometimes 2 years with a potential partner firm on their journey and on their path to independence. I would argue that our platform is one of the most comprehensive platforms in the entire industry. And trying to explain that and educate, especially a wirehouse advisor, on the art of the possible, on what is out there with independence. I think as we get into that, we help them make the decision of who they're going to embark upon their journey of independence with. So again, we're hoping to be a part of all these conversations, but there's never just one elevator pitch, Lewis, that is one line that gets you there. I'd be worried if it was. We take every journey of an advisor that is breaking away. Those journeys are important. They're life-changing for the principals. They're life-changing for the teams. I think they're also life-changing for the clients as well. So we spend a lot of time on it, and I'm punting on your question because there isn't just one sentence elevator pitch that we could ever give.
I gotcha. Let me take a different angle. Let's see if this one's better. There's a good number of firms and platforms who claim to provide a supportive version of independence or a soft landing for advisors breaking away for the first time. We don't have to go through name by name, but suffice to say, there's competition in your segment. If you were thinking about the competitors, again, without naming names, what do you think makes Sanctuary either different than all of them, or even just thinking about a handful of competitors? What are the things that you guys differentiate on?
I think there's a significant amount of substance, and I can give you substance to this question here. I talk a lot, Lewis, we just had our big Oasis conference last week and spend a fair amount of time talking to our partner firms, strategic partners, and even our employees around this about the core principles of our platform. And really, it's actually the core principles of evolution and success in our entire industry. So this doesn't only touch Sanctuary, this touches the entire industry. We are intensely focused on core principles of evolution and success. One of them would be expertise of people on your platform, like the depth of the solutions that we have on our platform. I believe, and maybe you think I'm talking my own book here, that they're unmatched. And the reason I think that they're unmatched outside of the work that we put into them is the almost 200 employees that work at Sanctuary, who I think are some of the most high quality subject matter experts in the entire wealth management ecosystem. Expertise is a core principle of Sanctuary. We surround ourselves with experts constantly. It's in our DNA. We are committing to support the industry's most sophisticated, elite partner firms that are out there. When you commit to supporting the best of the best, you have to be the best of the best. You're not always going to be perfect, but as it relates to expertise on our platform, a core principle that we live and breathe every day. Being client obsessed, being completely obsessed about our clients and strive for excellence in every single thing that we do. People use the word excellence. I would argue sometimes we could argue that maybe it's a bit nebulous or cliche. It is until it really isn't. And it's not just words on a mission statement. It's the result of, are you operating under a set of standards minimum standards and expectations of what you're going to deliver every day that leads to excellence. Another one is really how we work with our partner firms and help them engineer growth of their business. We talk about expansion, and you brought up my previous life at Ladenburg. And at one time at Ladenburg, my partners and I, we had a vision, saw an opportunity, became rigorous about data to support it. And then we went out there and we sacrificed everything we needed to do to go after it relentlessly. And I would argue we have an intent focus on expansion, but not our expansion. It's, can our partner firms grow faster on our platform that they can anywhere else? And again, we put a lot into that, whether it's with solutions, services, and just really the depth of the Sanctuary platform that supports that. Another one would be, we use the terminology, the core principle of expression. And I think very different than what a wirehouse can do, what an advisor can do at a wirehouse is how they express themselves to the market. I believe it's the evolution of marketing. People ask, what is your marketing strategy? I believe the real question should be is, how do you express your value to the market? How do you express your value to your clients? And we, I think, do as good as a job, if not better than any, in working with our partner firms to help them express themselves and to tell their stories. And then it's about client experiences also. And there's a principle about client experiences and customer service and how you show up every day. And there's 200 Sanctuary people, employees, that we try and push to be obsessed about our clients who are our partner firms that we wake up and serve every day. And it's not that there's like a client experience. It's like this catchy phrase that people use. It's woven into every handshake, every hello, and every interaction that we have with our partner firms. So again, we obsess over these core principles. And I think that really defines the differentiator of maybe Sanctuary's platform versus how others might view themselves in the marketplace. I think others do a really good job. I think our industry is so blessed that we have amazing companies that are out there that I think can probably sit there and attest they operate under these same core principles. And I think it's what's made our industry so successful versus the wirehouse.
Without a doubt. What do you view as the needs, and we'll say the different needs that a wirehouse breakaway has than someone who's been independent for 20 years? So thinking about the change in your prospect from Ladenburg, which was targeting more career independent advisors or newer advisors to the industry, to now where you're focusing on larger, more sophisticated, for the most part, wirehouse teams. Like, what do you think are the needs that are different for that segment than someone who's already been independent?
When I look at, I have conversations with wirehouse advisors, especially the larger ones. And like my first conversation with them, and I just hear about, we'll get to needs, but you hear about bureaucracy that they deal with. You hear about, I chuckle, I'm laughing here to myself when there's this very large, successful team at a wirehouse, very large, and that they're going to their manager and asking their manager if they can hire a new CA. I sit there and I laugh and I'm like, you guys got to be kidding me. This doesn't really still happen in an industry where you're really the entrepreneur that has grown this business, regardless if you're at the Y or whatever firm you're at, you're the entrepreneur that did it. And you're asking for permission to continue to support your clients and service your clients as best they can. So I hear stories like that and it makes me chuckle. And then it's just access to differentiated technology platforms that somebody wants. And at the wirehouse, there's so much bureaucracy around technology and platform and even access to products that's some of the most sophisticated advisors in the industry. They can't make a choice to bring that to their business, to bring that to their clients because they believe it's the best thing for their clients. And I chuckle and I find it surprising. But I chuckle and find it surprising, Louis, because the same thing in 2005, I would hear the same stories from advisors. And I would chuckle then, except back then, the wirehouse firms would sell aggressively against the independent space. That is, it is a fad. It's never going to last. It's something that isn't sustainable. And I remember in 2012, when the first time I saw the statistic was when Cerulli projected in 2012 that headcount in the broadly defined independent space was going to surpass the wirehouse space in 2018. Okay, it did. In 2018, it did. Assets didn't, though, at that point. But at that point, maybe you started to see this big inflection in people really questioning business model of choice for themselves and their clients. Then the next big projection came was that assets in the broadly defined independent space, RIA, Harvard RIA, independent broker-dealer, or all the above, would surpass the wirehouse space in 2024. Lo and behold, look what happened in 2024. And this is why I believe this is still very early innings in this transition. And are we saying that these wirehouses are going to sit there and mess around with their grids to take away the economic conversation that their successful advisors are having? Probably another conversation that we might want to go into afterwards. But for sure, if you're talking about a sophisticated advisor and what is in the interest of them building equity into the asset that these entrepreneurs have built for years upon years, and then how they can better serve their clients from a fiduciary perspective, in just direct answer to your question, there's a lot of things that an advisor needs and wants and know that they can access to, and they really can only do that independently.
Well said. So let me ask you this. You might disagree with the premise of my question, but it's from my own experience and kind of just, I'd say, not popular logic, but like a common refrain we hear is that a platform like Sanctuary is instrumental in helping advisors get out of whatever firm they're at safely to build a really professionalized business. Is to me like the most important thing someone should be valuing is how can I get out safely? How can I build the best business? But over time, the reliance that a lot of firms or advisors have on their platform begins to tail off a little bit. Or put another way, you learn what to do. So one of the risks of any platform really is that the utility of the platform overstays its welcome relative to the cost. So in your world, how do you guard against that? How do you continue to add value to your partner firms so that they're not leaving every couple of years and you're just constantly restocking the pond?
We spend a lot of time on it. And I would tell you that the only reason that the rest of, that the industry at large doesn't maybe put a nip in the bud on that is because there's only 125 sanctuary partner firms. I can tell you that out of the 125 sanctuary partner firms that we have, 94% of them said that they grow faster because of being on the sanctuary platform. So yeah, there is this euphoria of any team. And let's just take a wirehouse team that breaks away. There is a euphoria that happens when they break away, they become independent, they fulfill an entrepreneurial aspect of their career that they've been doing this whole time, but now they're sitting there and they're unlocking an asset. And then once they're up and running, it's how do you consistently add value? And I think this is part of the DNA of Sanctuary and not of these other larger platforms. If we're 125 partner firms today, Louis, if I'm looking out in 3 to 5 years from now, if we knock the cover off the ball and we complete our business plan, we'll be somewhere between, call it 180 and 220 partner firms. We don't wake up every day with the aspirations of having 2,000 partner firms. It's not what we do. And I would argue it would be impossible to manage the platform that we've built if we ever became like that, because it is a white glove service and it's because there's a curated platform. So what I mean by that is you have some of the most successful advisors leave a wirehouse and they've had all of this success, but they also have ideas or thoughts of what they could do that would be more impactful to their business, whether it's from a growth perspective, a product perspective, a technology perspective, a profitability perspective. And what we're able to do internally here is to put subject matter experts around individual opportunities and create infrastructure and build around it. What we find when we do that is that there are other advisors, other partner firms that want to leverage off either a solution, a technology, or a service that we are now providing. So I don't think there's a secret sauce to solving your question, because that is a challenge for people within the industry. And I'm not saying it's not going to be a challenge for every firm, including Sanctuary, but we work so hard to continue to invest back into our platform to ensure that if a partner firm on our platform is operating, let's say, EBITDA or EBOC margins at the highest end of the industry range, if they're growing, and we all know our industry suffers from an organic growth problem, if they're growing faster than other are within the industry, and they can attribute any type of success that they're having on, obviously they're successful in their own right, but to a partnership with Sanctuary, we feel that's an intangible that you can't replace.
Well said. Yeah, no, I think it's true. I think it's always going to be a constant struggle. Like advisors, especially now business owners, they're always thinking about how can I increase my EBITDA? How can I grow faster, et cetera? And ultimately, sometimes it's not even a fault of the platform. It's just the goals of a partner firm or of an advisor of a business begin to change. And if someone's really going to value, I want to make the most amount of money possible, I want to cut expenses, then maybe there's just the value exchange maybe wasn't what it once was, or maybe people just value different things. But I think what you said makes sense, that firms grow faster and they're accessing a very professional platform that would be very difficult to replicate on their own and probably more expensive to replicate on their own if they attempted to.
Yeah, and just to even add on, because I think you summarized me pontificating there for a while in a very articulate way. I do take lessons from, you asked me my first question, what is my lessons from the past? One thing that I've seen throughout history is that independent wealth management firms, partner firms, advisors, they're operating these real businesses. They might be smaller businesses, but they're real significant businesses. And I believe also that they historically haven't operated these businesses with enough rigor around analysis and data and having true strategic planning and how they look out their business for 5 years and back into with the end in mind, how are they going to get there? And it's all of that, Lewis. We're doing things like that differentiate ourselves in the marketplace, providing those type of services to our partner firms.
So you mentioned that I think you said 94% of sanctuary partner firms report that they grow faster with sanctuary than without. What are a handful of the specific ways that, we'll take it from two different angles, that sanctuary partner firms grow faster than the norm, but also let's say advisors who are now independent after leaving a wirehouse have the ability to grow faster?
It's a really good question. There's a lot of substance to why somebody will go faster on one platform versus another. Part of it is the size of the platform. And we talk about operating a platform to the lowest common denominator. I know it's something that you talk about a lot. When we operate at such a high level, really focused on more sophisticated advisors, that really doesn't become a problem for us. We're small enough where we can do things that larger bureaucratic organizations won't do. From a marketing perspective, for example, I think marketing is completely changing in our industry. Something our industry really needs to focus on is client acquisition and understanding where clients mostly historically have come from referral sources. And when you look out 5 or 10 years, referral sources they're changing aggressively. So how are you marketing in the marketplace? How are you utilizing all the different social media platforms that are out there? How are you actually accessing differentiated product that not every single advisor that's down the street from you has access to? How are there differentiated solutions? And I think when you couple all of that together, that's just one answer to a bigger question. I would argue that a big part of who Sanctuary is from a cultural perspective, and I know culture is something that is used by every firm, and I won't sit here and talk about my culture. I love when our partner firms or others in the industry talk about our culture for us, because it does speak for itself. But the fact that we are so willing to put our partner firms together to collaborate, when you get some of the biggest, most successful, brightest, sophisticated advisors in a room together, it is incredible because they're not competing with each other. It is incredible what they're able to do with each other, learn from each other, and help each other grow. So again, part of it, Lewis, is because we're still only 125 partner firms, and at least over the next 3 to 5 years, we'll be able to maintain that white glove, focused only on sophisticated partner firms. I would argue we will stay with that business model for 10 years. And I'm sure that the business model will evolve over time as our industry evolves, and even as we look at other areas to deploy capital. But I think it's a significant differentiator.
Let me give you one quick question, and then I want to talk about the really impressive and interesting acquisition that you did with True Independence. But if an advisor, a partner firm, comes to Sanctuary, obviously you hope that they're your partner firm for life. But it's no secret that the demographic trends in this industry are skewing older. Even on big teams with multiple generations, there's always retirements or possibility of retirement. How does Sanctuary help its partner firms monetize their life's work, essentially, whether it's for succession or it's just to take chips off the table, or because you want to take advantage of where the multiples are at this part of the cycle?
Lewis, it's a big deal and it's something we're very much focused on. And I was on a panel last week with one of the partners from McKinsey. I was telling them that I was fanboying all over our industry, their white paper on the looming advisor shortage in wealth management, which I'm sure you and many of your listeners have read. And I just think it's a really important bunch of data for us to talk about. Now, I do believe it's some of the bullish data our industry has ever seen. And as I go back and say, if we adapt and proactively evolve to the evolutionary landscape around us. But there's no denying it. Over the next 10 years, there's going to be 80 to 100,000 advised. Let's say there's 300,000, and this is in broad total. There are around 300,000 ultra high net worth or high net worth advisors, but let's say there's 300,000 advisors in the industry, 320. There'll be 80 to 100,000 advisors less in the industry that are looking either through retirement or some kind of monetization of their assets, looking to get some kind of liquidity to their business. And it's something that we very much are trying to be at the forefront of. A couple of examples I can give you is we have our strategic capital program where we'll allocate capital to partner firms in multiple different ways. Number one is, I think one of the bigger opportunities in our industry outside of organic growth is the inorganic growth opportunity that exists out there for the next 10 years. And I always meet for 20 years, Lewis, advisors that tell me that they want to acquire a business. And I chuckle at it because I think it's great. And then I ask the question to all of them is, that's amazing. What's your strategy? What's your diligence strategy? What's your underwriting strategy? How are you accessing capital? What's your valuation strategy? And then how are you going to integrate the business? And then, oh, by the way, while you do all of that, there's actually your true organic growth that you had focused on. There are trade-offs for making that decision. So we did something about it at Sanctuary, and some of our Sanctuary partners, the executives, created the Enterprise Partnership Program, where we are training. Beyond training, we give a curriculum and then give them a designation of being an enterprise partner firm with Sanctuary, where we will help them and we are training them to answer all the questions that I just asked you. What's your acquisition strategy? What's your value proposition? How are you going to integrate an acquisition? And we will also then, directly to your question, give them capital to do so. We'll either give them access to capital to do so, or I would love, even more so, would love to invest right alongside them and make an investment into their firm. We have made minority investments into partner firms. Today, we have 10 minority investments into Sanctuary partner firms. It's something that we are, I would say, taking a very aggressive look at now on expanding it. And then it becomes the question, Lewis, is as advisors or partner firms are looking to really unlock equity in their businesses that they've built, is the natural evolution for Sanctuary to be that not only access to capital, but the platform for who they can access all liquidity. So those are just a couple of examples, but I think that we are at the forefront of this evolutionary cycle in the industry and trying to not ensure that Sanctuary isn't only the one that benefits from it, but that every one of our partner firms, understanding that they are some of the most elite in the industry, that they can benefit from inorganic growth, the inorganic growth opportunity that exists out there.
I love that. I love that you use the data to support your hypothesis as well. And honestly, we speak to a lot of firm leaders on this podcast. Obviously, I'm in traffic with pretty much everyone. Everyone in the industry is looking to recruit. The fact that you have an internal designation for advisors looking to acquire, I think is really smart. There is so many advisors, to your point, who want to acquire. Most don't have any idea where to start or what to do. So the fact that there's a way for them to sharpen their skills, to have the right support, and also just to differentiate them from even just the 125 partner firms within Sanctuary is very smart, because nothing's worse to a referral source or to a deal than a counterparty not knowing how to drive a process or not having a process around what they're trying to do. And ultimately, it's one of the biggest decisions that an advisor makes is selling their business and who they're going to sell to. So the fact that your partner firms are putting their money where their mouth is and showing folks in the market that it's something that they're really interested in and that they're willing to invest their valuable time in doing is amazing. So I'm a big fan of that. You didn't ask, but I am a big fan.
Thank you. We're excited.
So in May of 2024, it was announced that Sanctuary was acquiring True Independence. And True was and is a platform that helps advisors launch RIAs. And I believe they also had a corporate RIA or a shared ADV model. Can you talk a bit about this transaction and why you pursued it? What did it allow you to do differently?
Sure. Their shady ADV model was really legacy. It wasn't really big and still isn't big to date. But let me backtrack. When I took over as the CEO in 2023, outside of after meeting all the partner firms and drinking through the fire hose that I drank through, I started to look at a lot of data around how the company was performing. And obviously, business development is the pipeline and lifeblood of any growing business from an organic and inorganic growth perspective. And I would look at, let's say, historically, you'd look at advisors that made a choice not to go to Sanctuary. Where did they matriculate to? And some advisors would choose to have their own regulated entity. And understanding that there's a big marketplace to support independent wealth management firms. And the word independence, I don't even want to go down a rabbit hole here, but the word independence encompasses 4 different business models. There's a
Probably
wide,
more, honestly.
probably more. I 100% agree with you. That's like a 2-hour podcast. We should have this set up and just talk about the word independence. But in understanding that Sanctuary had this platform and that there were very sophisticated advisors that are out there that for some reason or another choose to have a regulated entity. For us, it was like, why not? We have such a depth of a platform, of a curated platform that they can utilize that we don't do business to lose money. So it can be profitable to us. Why not also be in that business? So, and that was what led to the acquisition of True Independence. They have incredible advisors, partner firms, independent wealth management firms that they support. We brought on a couple of big ones this year as well, but that was really the strategy behind it, is just to cast a wider net and expand our total addressable market in a market that we believe we're capable of serving better than many.
Yeah, I think after you guys announced the deal, you and I spoke and I told you I thought it was the exact right type of acquisition to do, because I'm not going to say it's 50-50, but there's definitely a good proportion of advisors who want to have their own RIA. They want that extra level of autonomy. Maybe there's something about their business that they're worried about supporting on a shared ADV or a centralized RIA. So I agree with you. It helps with increasing the size of the addressable market. I would assume too that as some of your partner firms grow and develop and scale, there's probably some that are talking about or would like to go and have their own RIA. And it's also the next evolution of how you can support many of your firms.
Yeah, if they make that choice. And that's a whole other conversation of people are interested in it, but like, what is the true reason that you want to make that choice? Could there be more profitability to it or not? Let's use data to make a decision. You own a regulated entity. How do you put a value on risk? So, and then it's also, what are you sacrificing by doing that? It's a very deep question, but the answer is yes. If somebody wants to have their own regulated entity or not have their own regulated entity, we want to continue to be the destination of choice for the most sophisticated independent wealth management firms in the industry.
Is there, just from like an educational standpoint, and obviously it's your opinion, is there a profile of advisor or team that lends itself better to having their own RIA or regulated entity, as you've said, versus someone who affiliates with the corporate RIA or the sanctuary RIA or hybrid RIA?
Listen, I get asked the question a lot, and my completely unbiased viewpoint, we own 2 companies that operate in both, it's really about why. You got to answer the question, why are you looking to do that? I'll give you an example we talk about. If you're an advisor and you want to start your own hedge fund under the Sanctuary corporate RIA, where we're taking on that risk, I don't know anyone in the industry that has figured out a way to supervise all of the conflicts of interest there's a conflict of interest there. I don't know that anyone has really truly figured out how to do it. And I would then tell somebody that probably, because you're making a business decision there. I think the real question somebody needs to ask is, are you building equity? Is what you're doing building the equity that you own in your company? Is it the right structure that then are you still going to be able to focus on growth? Is your business really growing now? And then when you compare your EBITDA or EBOC margins to others and you price out risk? Is it a play to make a couple of more bucks? Is it a play to that? Are you going to be able to focus on the growth that you have? Are you going to be building equity or not? I can tell you that there's no data out there that supports that the business is worth more under one common ownership. I can show you examples of both on Sanctuary platform and others. So again, it's about answering the question, why are you doing it? And can you still grow the business like you were? Are you understanding the risk profile that you're doing? And this is the reason that you want to take on more risk that might be outsized to somebody else's. I think those are bigger questions that advisors need to think through.
Yeah. So maybe I just come down to goals and sensibilities. Just someone wants something different than a shared ADV model. I'm in the same camp as you said before, that there's 4 different independent business models. Like I said, I think there's probably more. To me, what advisors want when they say they're independent, not trying to argue a textbook definition, is that they own the data, they own the clients, they own the equity in their business, they can have their own brand. Like those seem to be the non-negotiables that people care about. And then it's just picking the elements that are most important to you beyond that. Is it the support I get? Is it outsourcing? Is it the community? Is it the way compliance is handled? Is it having the most amount of autonomy available to me? So I think all of those are true. And again, very smart to have both options, because now you don't have to arbitrate which one's better. It's just, hey, we can support both and let's learn about you and your business and make the best possible decision.
This is why I think the answer to all 4 of your questions that you asked exist, at least at Sanctuary. I don't know what other firms do, but both on the Sanctuary or on the True platform. If you look at we've had over the past 4 years, we've had 3 clients that have offboarded, 3 partner firms. You can go ask each one of those 3 partner firms, did they own their clients? Did they own their data? I'm just saying, on both sides of the spectrum, the answer to that, Sanctuary, is unarguably yes to all of those.
You all said. Let me ask you one more question, because I know you're a busy guy and have better things to do than speaking to me today. But
no, this has been great. I enjoy speaking to you. Sometimes I enjoy speaking to you during ski season and hearing how everything's going in Utah, but this is fun too.
There we go. Well, it's a whole other, maybe ski season, this podcast like 20 minutes. I got to save time for other things. But so the last question, if we had this conversation 3 years from now, where do you think Sanctuary is and what has changed with regards to capabilities, the culture? You mentioned a little bit about the vision of how many partner firms, but what's on your hit list over the next 3 years to accomplish that would say, hey, I did really good, the company's in a great spot, and we're better off for it?
Again, I'm maybe a little repetitive. If we, in 3 to 4 years, we're at 200 partner firms and call it 100 billion of assets, maybe that's 90 billion, maybe it's 120 billion. Tell me how the markets do over the next 3 years, and I could hone in more of that. The fact that we can stay true to what we tell every partner who we are from a cultural perspective, the fact that I can continue to be out there and speak to every single partner firm twice a year on Zoom, that I can have a dinner 1 or 2 times a year with every single partner firm, either at an event or going to their home office. The fact that we will always keep the culture integrity of what made Sanctuary so great to begin with, and that we continue to add more sophistication to our platform, that we continue to add curated services. We're at an unprecedented time, which we're really not going to go into too much, about AI, continued evolution of our industry, and how we need to be an eye on disruption that will inevitably happen in the industry. We do a lot of thinking and talking around that. So hopefully that helps propel our platform forward. And again, just to wake up every day with incredible integrity of understanding that we serve the most sophisticated partner firms in the industry, and we continue to carry that flag. In 3 years from now, I think that will be an impactful go forward strategy for Sanctuary today. And then also expanding on what you talked about, which I think is a very big part of Sanctuary's go forward business model, is a capital solution. As over the next 10 years, more partner firms, advisors are going to want to unlock some kind of capital or equity that they've spent a career doing. And over the next 3 years, I think from a strategic perspective, Sanctuary will be a more significant player in that space.
This has been a fun one. It's always cool to get different perspectives. We've had, like I said earlier, a number of your partner firms on to share their story and their journey and what their process was and how they're growing their business. But to match that up with your perspective, especially coming in from the outside initially, and just seeing the fingerprint that you're leaving on the company is very exciting to watch. So I'm sure we'll do this again soon. You're to give me a bunch of ideas for future conversations, but we really appreciate you investing your time with us today.
Well, Louis, I appreciate it. And just one little thing here is that there's almost 200 sanctuary employees that wake up every day and live, eat, and breathe our partner firms. And trust me, they're the ones that are shaping the future. I just wake up every day and understand that I work for them. So I appreciate
Well
I appreciate you having me on. I appreciate you having sanctuary partner firms on. You should have more of them. They have the most incredible stories to tell. They inspire me all the time. So I appreciate what you do and I appreciate your partnership.
Fantastic.
As a financial advisor, you hold yourself to the highest standards of integrity, honesty, and credibility. You are successful because you take your professional responsibilities seriously and are dedicated to your clients. But are you living your best business life? Are your goals aligned with your firm's, or could a better option exist? Should I Stay or Should I Go is a book written with you in mind. It's a self-guided journey that walks you through the key steps that we take with our advisor clients. This strategic thought process and roadmap to professional self-discovery is designed to help you ask the right questions and think critically and objectively, whether you're considering change or not. Learn how to get your copy at diamond-consultants.com/thebook.